So if you, if you're watching this via the recording, you can email me at brown.6888@osu.edu, and we'll be able to get those answered back to you. And then slides for today's presentation are available at the farmoffice.osu.edu. If you just click the grain market summer update, it's that link there at the bottom where it says attachment summer 2020 climate and grain marketing update. And so again, we want to point you there if you want to access the slides today. It's got both Aaron's and I's. This will also be posted on the YouTube page as well. And I want to give a shout out, at least for my part, to Scott Irwin and Todd Hubbs from the University of Illinois. The format that I'm following today is theirs, largely theirs. They're very good at their job, and I'm thankful that they are part of kind of the grain marketing team as well. And so with that, we'll continue to move forward. When we look at the grain stocks report today, one of the things that was kind of interest to us as we were thinking ahead was, how much grain did we use in this third quarter when we saw a lot of livestock, being held on farm and just not moving through the system. And so we didn't know how much feed was getting fed with that extra livestock, but then even just slowing down those feed rations. So the average trade guess today was just under 5 million bushels 5 billion bushels of corn. And the grain stocks came in at 5.2, just over 5.2. So a bearish signal on that side, but it's going to get overshadowed with the acreage report, and kind of foreshadowing here just a little bit for that acreage report a little bit later. When we look at this in terms of what this means for the trade guess in the past, we had a bearish shock, meaning that our actual stocks came in above the trade guess for the June report. Last year, a reminder at this time, we had 130 million bushel shock to the bullish side. This year, we're back to those bearish surprises where 5 out of the last 7 years have been bearish surprises. It's also our largest bearish surprise since back in 2010, 2011. And so we continue to see, the market kind of undershoot where the actual stocks come in. What this ultimately does is it allows us to back out an implied third quarter feed and residual use calculation. This is probably where a lot of the focus was placed for these stocks numbers, was based on what this third quarter feed and residual use number was going to be. And given that we can make an estimate of ethanol production, corn used crushed for ethanol, and we track exports through the Census Bureau, we can subtract all those out, including seed used during this third quarter to plant the corn crop, and we can get basically what is left in feed and residual, or what is fed on farm that doesn't ever go through a point of sale. And so this is the implied third quarter feed and residual use number, and it's lower than I think any of us were expecting heading into this. And you look at it in comparison in the last few years for this third quarter, 772 million bushels is a lot lower. And so that we're not feeding as much. This would imply we're not feeding as much, certainly, even with, all the livestock numbers that we had, and the hogs report last week showing a record amount of hogs on hand for the U.S. So, something that's maybe a little bit of a ponder for me. Certainly it raised some eyebrows when I was looking at it. But ultimately, how can we translate this into what our feed and residual use will be for the total marketing year? So the bars that I've got represented there are feed and residual use through 3 quarters of the marketing year. And you can see right now, based on, on my implied value that I just showed you on the previous slide, we're just over 4.7 billion bushels of corn used for the first 3 quarters of the year. If we take that as a percentage of the final marketing year, which is represented there in the blue line, right now we're at 82% of what that final marketing year would suggest. And that's definitely the lowest we've seen in a while, signaling that USDA might come down from that feed and residual use just a little bit. We saw them increase it both in the May WASDE report as well as the April WASDE report. And so, we could come down just slightly from that. So that's what I've tried to capture here in this chart. And that first line there represents the June WASDE report. 5.7 billion bushels is what USDA is estimating for the current marketing year. And then I've basically multiplied that by a factor of how much the first 3 quarters of the marketing year added up to their total. So if you look at 2009 through 2014 or 13, for instance, about 92% of our feed and residual use came in the first 3 quarters of the marketing year. If we applied that 92% times, the number I just showed you in the previous slide, that gets us to a total marketing year average somewhere north of 5.1 billion bushels. Same concept here if we look at, the marketing year 2014 through 2017, 89% of our corn feed residual use was used during the first 3 quarters of the marketing year. If we hold that percentage this year, that gets us to 5.3 billion bushels. And then last year we used 83% through the first 3 quarters of the marketing year, and that gets us really close to that USDA WASDE amount. So it's kind of, what does that first 3 quarters of the marketing year represent in terms of the grand scheme of things? Personally, I think we're going to be, pretty somewhere in between, last year and that 14 through 17 average, just given the size of the crop. I think we're going to be above last year for the first 3 quarters, so above that 83%, but probably coming in a little bit softer than the 89%. And we'll talk about it. But then my final column that I got there is the feed and residual that we need in the 4th quarter to meet USDA's current estimate. So again, you can see the percentages that we've applied. And then, if you subtract that from the 5.7 billion bushels that USDA has, that's where I'm getting those numbers. So, if we only did use 83% of our corn so far for this marketing year in the first 3 quarters, we get really close to USDA's average of 5.7. I think we'll be down a little bit from that, and we'll talk about that a little bit later. So what does this, ultimately mean for the old crop balance sheet? Again, I'm not going to show you the new crop because we're going to talk about that in a moment. So this is just specifically the 2019-2020 marketing year. That first column there, that's USDA's WASDE for the month of June. Everything in there in black is what was printed in their WASDE report. And then what I've got there in percentage, not the percentage, in the parentheses, the pluses and minuses, those were changes USDA made in June from their May estimates as well. And so you can see, the direction. Pretty much the 2 biggest was they did reduce old crop production down just a little bit. Again, we had a lot of acres in the northern plains, North Dakota, Minnesota, South Dakota, that were still getting harvested. So there's a 45 million bushel reduction in supply. But then we also saw them cut ethanol another 50 million bushels in that report. And so those were the big changes. The second column is basically after today, and keep in mind, don't look at the supply on the top because that was what USDA had printed in their June WASDE report. And so we're just specifically looking at that demand column for a second. And, you look at this and I do think we're going to come down 50 million bushels, 25 million bushels, somewhere in that neighborhood for that feed and residual use category. I still believe there's another 75 million bushels that are going to come out of that ethanol picture. And then just given where corn exports sit today, the possibility that some of these exports are going to roll to the new marketing year when it starts September 1. I've got exports down another 10 million bushels just out of this year. Nothing major in that one for that 10 million bushel reduction. Just I think we're going to see some of these shipments move to the next marketing year. All in all, that gets us a little bit higher on our ending stocks, about 100 million bushels higher, 120 million bushels higher on our ending stocks. Doesn't really change our corn price from what USDA's got printed in their WASDE report. And again, this is for that old crop marketing year for 2019-2020. As a policy point, I would just point out that 360 cash price there for 2019 sits 10 cents below the PLC reference price. So for every bushel that you have enrolled in the price loss coverage program through FSA, that triggers a 10 cent per bushel payment there for corn. Looking at soybeans for a quick second here, June 1 soybean stocks came in just under 1.4 billion bushels of soybeans on hand. That was pretty much in line with what what the traders were expecting heading into the day, just 6 million bushels off. They were a little bit higher, but again, nothing too concerning there. And again, we don't have the big question marks in soybean ending stock or in soybean stocks on hand like what we do on corn stocks, just because we can track soybeans in a much better way than we can corn, because soybeans fed on farm still get processed and they show up in the crushing report. And I'll show you that here in just a second. Again, not a big deviation from the average trade guess when we look at surprises on the old crop soybean stock side, just down 6 million bushels. Certainly nothing like what we saw a year ago when we came in 71 million bushels. below estimates that traders were expecting at the time. So again, when we look at demand for soybeans, and what I'm showing you here is just kind of why we were able to track soybean stocks a little bit better. We look at the National Oilseed Processors Association reports, and we can track, and I'm representing there in that left-hand graph with the red line representing our current marketing year. And you can see that we've set new records, month after month for this marketing year. And soybean crush, and the National Oilseed Processors Association represents about 95% of all soybeans processed. So you can make that adjustment to figure out what we crushed as a country. But part of the reason why we've been we've been able to crush soybeans at the rate we have is the crush spread through March really provided an incentive for processors to expand soybean production. And I'm showing that here in the right graph. This is a soybean crush margin all the way from September of 2017 through today, through June. And you can see that we saw that nice rise there starting in March as the coronavirus kind of started. Really, it was a logistics issue. There was the challenges of getting soybean meal out of Argentina, a main supplier of world soybean meal. But then soybeans got a little bit cheaper, and we saw soybean meal become more competitive to some other feed products. And so as a result, soybean meal as a price was continuing to hold or increase just a little bit for a while as whole soybeans were falling, and that sent the incentive to soybean crush facilities continue expanding crush. And we've seen that the last couple months, all the way through May, which is the last month that we have the NOPA report. We'll get the June NOPA here, July 15th, in a couple of weeks. So this implies, when we look at what this ultimately implies for soybean crush use for the full marketing year, and here's what I've done. I've just taken, the individual soybean crush reports that we get and making the conversion to a national standard. And then you can see where we've fallen each month. And based on the latest NOPA report and the conversion to U.S. crush, that would imply right now that we could see 2.15 billion bushels of soybeans crushed. That's what it would imply. The May estimate came in at 2.145, and we certainly, I think, support that in terms of USDA making that increase. The math that would suggest that was a method that was there was evidence to support that move up, and I see nothing wrong with that. When we look at the export side for soybeans, and again, these are old crop soybeans, what I've got here is the rest of the world commitments in black, and you can see where we've trended with the rest of the world exports, and then the red bars represent Chinese commitments. And this is through the first week of June, because keep in mind, we track stocks for soybeans through the 1st of June. So I used trading estimates up to that first week of June to kind of create this graph, and you can see where we compared to previous years based on that beginning of June export numbers. When we started the month, total export commitments for through the first week of June set at 1.6 million bushels, or 1.6 billion bushels. We were down 7% from that same period 1 year ago. So even though we have seen increased shipments and commitments to the Chinese, we continue to be down globally on soybean trade. When we look at exports that have left the country and headed, wherever they're going to go around the globe, we're still short of our seasonal pace needed to reach our current target, USDA's current target, by 83 million bushels. Those are exports. But when we look at the export commitments, our export commitments, and which a commitment is basically what we've shipped plus what has been sold, ready to ship, sits right in line with USDA. So we're, again, USDA I think is right in line with that. The question I would have is how many of these outstanding sales, roll to a new marketing year, and we see some of those shipments turn into new crop soybean exports. When we look at outstanding sales through that first week of June again, we're looking at 289 million bushels. Excuse me, this is of this last week. 289 million bushels of outstanding sales for soybeans. China currently holds about 37% of those commitments. And so we've seen some recent buying in recent weeks, not this last week, but previous weeks before this last week. And that supported the soybean price. Most of those sales were for October, December delivery, I think providing some protection to the Chinese and other buyers that we would have soybeans to ship during our harvest if Brazil, for instance, started to run low as well. So all this comes down to trade and looking at the impacts of being able to ship soybeans, and the question becomes, how big of an impact will the phase 1 trade deal have on soybean markets? And there's a lot of great people that do some work in this and look at, you know, the possibilities of China buying, you know, significant amounts of soybeans. And, you know, I guess I kind of look at it and I go, okay, what's the possibility that, you know, we're going to see, you know, increased trade through the remainder of this marketing year? You know, if they're going to start making large purchases for this marketing year, they need to happen this week or next, because it takes, you know, 2 to 3 weeks for logistics and a couple of more weeks to get the soybeans once they leave, you know, the United States to China. So, you know, for this current marketing year, I think we're slowly, you know, running out of time, but next marketing year, maybe some possibilities. When we look at this phase 1 trade deal, what I've got here is these are actual sales, ag sales from China in the red bar, or from the US to China in the red bars there by month. The gray bars represent sales needed to hit USDA's current forecast of $13 billion worth of ag and ag-related products. And then you can see there the black line represents our seasonal forecast. And the seasonal forecast is well below what we need in sales to reach USDA's current target of $13 billion. I'll remind us all that the phase 1 trade deal is on a calendar year, not a fiscal year. And so we'll continue to have to monitor this to see, you know, where this goes. But, you know, I do see China buying more soybeans in the new marketing year. The question is, you know, just how much, and, you know, how's that U.S.-Chinese relationship looking for the prospect of that soybean exports? And we can talk more about that if people have specific questions. The same thing we did on corn, you know, just looking at the old crop for just a second, 2019-2020 marketing year for old crop soybeans. Again, USDA's June WASDE there in that first column, my estimates and changes in the second column. I don't have a lot of changes. I think the soybean crushing, I had been advocating for that to be increased for a couple months or talking about it. So I think they're right in line with that soybean crushing value, but exports, I think will come in just a little bit softer than what USDA is, just on the premise that I think we'll see some of these new crop, or some of these old crop soybean exports get rolled into the next marketing year. And as a result, you can see I've got just a little bit of a change in price, but not much. And for government programs, you know, that 855 in soybean prices for the old crop marketing year is 15 cents above the 840 reference price for the price loss coverage program on soybeans. So with that, I will turn it over to my colleague, Aaron Wilson. He's going to talk a little bit about climate and weather and what we can expect for yields and possibilities of rain coming shortly. So with that, Aaron, I'll turn it over to you.
Hi, Ben. Can you hear me okay?
Absolutely.
Fantastic. So yeah, it's really great to be here with you. I know we've talked about doing something like this for a while, and I see a lot of familiar names in the participants list. So it's really great to be here with all of you today. So yeah, we're kicking around these ideas. Obviously, weather and the weather moving forward over the next few months is ultimately going to play a big role in yields and ultimate outcomes here across the country. And so we thought it would be a good idea to kind of just give an early an update here to the summer outlook. Obviously, we're 1 month through meteorological summer, which begins June 1st here. But anyway, we're getting started and we're taking a look at things. All right, Ben, so we'll go to the next slide. I thought we would start with kind of looking back at our spring real quick, you know, our spring planting season for sure. You know, across the north central region, it was generally close to or slightly above average, a little bit more above average in the eastern states, Wisconsin, Michigan, and here in Ohio where I am. And closer to average across much of the central portion. And then once we got out into Colorado, Wyoming, certainly very warm out there. So that might be hard to believe considering that April and May were quite chilly, especially here in the east. But March was, for instance, the 11th warmest March in Ohio. So, you know, you add warm and cold and you get close to average. So that's how the climate stats work. If we look at the next slide, looking at precip, also a gradient across the region, generally a little bit wetter here in the east. This kind of is a refrain that we're used to now for our springs for sure. We see repeated wet springs now, very wet in Ohio and in Illinois, for instance. Out west, particularly places like North Dakota, they had their 9th driest spring, which, you know, if you think about differences across this entire region compared to 2019. So wet up in the Dakotas last year, and now very, very dry conditions there with drought conditions set in. And we'll talk a little bit more about that as we move on. But again, out east here, Michigan, Ohio, Missouri, relatively wet. Indiana sort of stuck out, and actually some drought conditions have initiated in Indiana this season now, some drier than average conditions that are starting to expand a little bit now into Ohio and parts of Illinois as well. And we'll take a look at that as we move forward. So on the next slide, we can look at a little bit more recent conditions here. These are our recent temperatures across the Corn Belt region. So over the last 7 days, you can see well above average temperatures across the Dakotas down through western parts of Nebraska and Kansas, where temperatures are running anywhere from 4 to 8 degrees above average over the last week. Counter to that, basically from Missouri, Iowa, and points eastward, conditions were at or a little bit cooler than average. A little bit more rainfall, especially in some areas in Illinois, southern Wisconsin, and then parts of southern Illinois up through north central Indiana for sure. If you saw the reports out of western Indiana of some 7 to 9 inch rainfall events over a couple days there in places like Kirtland and other areas. If you look at the last 30 days, as far as temperatures go, we're generally warmer than average here across the entire region for the last 30 days, which is a switch from our April and our May condition, where it was very chilly across the region, and now we've warmed up generally across the entire north central region. The next slide, which is more focused on the precip that I kind of gave away there a second ago in terms of what happened in Indiana the last few days, but generally precipitation has been generally on the light side across the north central region. So we can see anywhere in the orange shading is less than 3.5 inches over the last 30 days. If you look at the greens and the blues that you see in parts of Iowa, Wisconsin, there we're getting upwards of 5 to maybe 10 inches of rainfall in that location. And generally across the region, if you look at on the right-hand side, well below average. The dark red areas indicating precip over the last 30 days has been less than 50% of average. So we've got some dry areas that are starting to develop, and certainly drought conditions now that have entered the picture in the Dakotas, parts of central Minnesota, and elsewhere as well, as we'll get to later in the presentation. So the next slide. Of course, with the precip and the temperatures, obviously when we get into summertime, precipitation means a little bit different, something different than it does in the wintertime. For instance, 1 inch rainfall in February does not equal a 1 inch rainfall in June or July. So we obviously, with the precipitation deficits now running close to or below 50% of average across much of the north central region and the Corn Belt, we could see a lot of our soil moisture that we started out the spring with in terms of surplus soil moisture has really been depleted now. There's a couple interesting features we can see here. First of all, if you recall, a couple weeks ago, we had Tropical Storm Cristobal come ashore here in Louisiana, Mississippi, and it dumped some heavy rain from Arkansas northward through Missouri, eastern parts of Iowa, up into Wisconsin, and here in Ohio, across Indiana and Ohio, of course, we had derecho move through. It did a lot of damage across the state here. But that's basically the only path that really has surplus in soil moisture. And this is looking at the top 1 meter of the soil surface here. A lot of areas are starting to depict soil moisture anomalies, percentiles, a little bit on the dry side here. So again, across the Dakotas, western parts of Nebraska and Kansas, up into western part of Iowa as well, and then extending into central Minnesota. And again, some dry conditions now really starting to stand out in parts of Indiana and northwest Ohio. On the right-hand side, you see the change in the top meter soil moisture percentiles just since the end of May, right? So we're just looking at a 1 month difference here, and you can see much of the region is shaded in orange and red, indicating that the surface or the soil has been drying out very rapidly. This is something that happens during the summertime. So let's kind of look at this a little bit closer here in the next couple of slides. So if we go to the next slide, instead of looking at the entire first meter of the soil, I'm using a NASA product here on the left-hand side just to look at the top 40 centimeters of the soil surface. And this really is indicating where the surface is dry. You know, last year, for instance, I'll just, a story here from Ohio is we were wet for the first half of the season. And then the second half of the season, obviously, we got dry. We had drought conditions by October, but we never really lost the deep surface moisture, but that top surface was really drying out last year. And right now we're in a similar scenario where, parts of northern Indiana and Ohio, we're really starting to lose that surface moisture. Some areas, from western Iowa back through Nebraska and into the Dakotas are really standing out, where that surface moisture has really depleted now and drought conditions are really set in there. This past week we had a little bit of an improvement here in the eastern Corn Belt region, where we've seen a decrease in the percentage of short to very short topsoil moisture here across the eastern states, Ohio, Indiana, Illinois, where a little bit of rainfall fell. And certainly, as I mentioned before, Indiana really getting rocked with heavy rain this week. The western states in the central region, again, continue to dry out. Those percentages of short to very short topsoil moisture are increasing there. So there are signs that there are a lot of dry areas starting to emerge. Dry in the beginning is not necessarily bad, especially if there's plenty of soil moisture there. But as we continue to dry out that surface, it's going to continue to start to stress the crops that we have out there. Next slide. So back to this concept, this idea of, not every 1 inch rainfall is created equal. It really comes down to the moisture demand that we have out there. So we have a product, this is from NOAA, called the Evaporative Demand Drought Index, EDDI, or EDDI for short, that really kind of exemplifies or illustrates what we call the thirst of the atmosphere. And by that, I mean, obviously, when 1 inch of rainfall falls in the summer, you've got a growing crop and you've got vegetation and it's using that water. But the warmer temperatures are also, leading to more surface evaporation. And so we think about the thirst of the atmosphere. And if we can measure this in a couple of different ways. And one way with this index is to really show us the precursors for water stress. So this is the 1 month EDDI categories for June 25th here. And wherever you see the orange, the yellows and the orange, that's indicating that conditions are a precursor for drying. And wherever you see red, we're well into drought categories that are used by the U.S. Drought Monitor here, especially if you look out into Colorado and western Kansas, Nebraska, parts of, again, central Minnesota and parts of the Dakotas that we're showing up on sort of on the extreme now. That thirst, that moisture demand is really high. They've been really high out here, a lot of windy days. You may be hearing a lot of windy days out in the Central Plains, even more so than usual, which has really dried out that surface. A little bit of what's happened in the east is we have been a little bit close to average or even cooler than average at times, and that's kept the demand down a little bit. But we've got demand, moisture stress now that's starting to show up in our EDDI categories here in parts of Indiana and Ohio. So that's what we're seeing in terms of that moisture demand across the surface. So evaporation rates are really intense this time of year. So if you think about how much potential evapotranspiration there is, we can talk about things like reference evapotranspiration, meaning, assuming that conditions are saturated, the atmosphere is going to demand about 1.5 inches over the next 7 days, right? So, you have to get 1.5 inches of rainfall to kind of meet that demand. And that's what we're looking at across much of the Corn Belt region here right now. So next slide. So a little bit, just from a hydrologic standpoint, we are seeing some of our stream flows kind of fall now, something we haven't seen quite some time across the region, especially in parts of Ohio. Certainly they're a little bit higher now in Indiana, given the conditions the last few days. Still high in that eastern Iowa up through Wisconsin. Wisconsin has been wet for about 2 or 3 years now, and they still haven't dried out there. And again, some areas showing up in central Minnesota and Dakotas where those stream flows are falling as well. So if we go to the next slide, this is the U.S. Drought Monitor, where kind of conditions as we sit last Thursday. Again, we see these moderate drought conditions across much of western North Dakota, South Dakota. We've got moderate to extreme drought conditions extending from southwestern Nebraska down into western Kansas and parts of Colorado. So there's certainly some drought stress that's creeping in on the western side of the region. Again, the moderate drought conditions that have been around for a while now across central Minnesota, but also parts of western Iowa. And then the dry conditions that we've had really expand outward from Indiana toward southern Illinois, Western Kentucky, and then up into Northwest Ohio as well. So, it's kind of amazing to think what kind of year Northwest Ohio had in 2019. The inability, for instance, to plant because of the extreme wet conditions, and this year is just the opposite, where that's the first part of our state that's looking at dry to drought conditions. So we can see the 1 week change here over our drought categories. So expanding drought over parts of the Dakotas, parts of Missouri, also southern Illinois, and then up into Ohio as well, as conditions are continuing to dry out here. All right, so that's kind of a look at the past and where we are now. So what about the forecast? So we can start looking at the forecast now. We'll go to the next slide, Ben, and these are going to go fairly quickly, the next couple slides here. So we've got a setup right now. We've got this frontal boundary out in the Central Plains. It's providing a focus for some much needed rainfall out in that portion. We went a little too fast, I think. Ben, go back one. That's all right. We'll just leave it there. So we've got rainfall across the Dakotas. We've got this frontal boundary in the east as well. That's sort of sliding off to the south and west, and that's providing an area of scattered but very heavy thunderstorms the last couple days here in Indiana and Ohio. But as we head toward the weekend now, that's really going to push out of the region. If we go into Friday, the next slide, much of the region really starts to dry out under high pressure. And temperatures are going to start to climb. So we're here in the east, we're going to see a lot of highs in the upper 80s to low to mid 90s, and we're really going to kind of set a path here toward fairly dry conditions over a large portion of the area, even as we head into the weekend here. If we go to the next slide on Sunday, really just looking at some scattered showers across Minnesota and Wisconsin, but much of the region looking at high pressure and very warm and dry conditions across the region. So if we go to the next slide, the 7-day precipitation forecast from the Weather Prediction Center. It's not often in the summertime that we see areas here in the Midwest and Central Plains, for instance, where the models are indicating no rainfall for a 7-day period. But that's exactly what we've got here in parts of Ohio and southern Michigan, where the next 7 days we're looking at very little precip, essentially the northeastern 2/3 of the state of Ohio. We're going to crank those temperatures up as well. Some of the dry areas like the Dakotas are expecting some heavier rainfall here, so we're looking at 1 to 3 inches up there. So maybe some minor improvements to the drought in the short term there, extending down through Iowa into Missouri and western Illinois. So some improvements in a lot of areas there. Farther west, Nebraska, Kansas still kind of drying out. So continued drought conditions expected there. And then I think intensifying dry conditions and drought conditions setting in for Northwest and Northern Ohio. So it's not necessarily good news here if you're living in Ohio. I think certainly the lack of rainfall and the warmer temperatures as we head into July is not a great combination for us, but we're going to see some drying and I think some crop stress too as we start to move into the short term. So if we go to the next slide, we can look at the 6 to 10 day outlook from the Climate Prediction Center. This is for July 5th through July 9th. A strong probability of warmer than average conditions across the entire north central region. So the high probabilities here, we're talking really greater than 60 or 70% in terms of warmer than average conditions. And average conditions, are basically in the 80s with lows in the 60s. I think our overnight lows are going to be warmer than average. We see that year after year now, a very warm overnight lows in the 70s, for instance. But we're going to couple that with wetter than average conditions across the northern tier of states, from Montana to the Dakotas. Again, some short-term drought improvements up there, but perhaps some continued drying from Nebraska stretching through northern Missouri, southern Iowa into western Illinois, and then up into the Ohio Valley as well, this July 5th through the 9th period. If we go to the next slide, there's not a lot of change in the 8 to 14 day outlook. This is basically July 7th through the 13th. Again, warmer than average conditions across the entire region. Looking at dry conditions, from the Central Plains eastward toward the Ohio Valley, maybe a bit wetter than average across the northern tier of states. So that combination of a lot of areas where the soil is drying out, coupled with warmer than average conditions, it's not really a coincidence. So once we evaporate that moisture from the surface, the soils are able to heat up more rapidly, more efficiently. That leads to air temperatures that are able to warm up during the day. So not only at night, but also during the day, as our soils continue to dry out, we put more pressure and increase those daytime temperatures as well. So if we go to the next slide, looking at the 8 to 14 day risks, we do have a moderate risk for excessive heat. Really across the southern tier of the north central states. So Kansas, Nebraska, eastward, Iowa, Illinois, Indiana, and Ohio, looking at a moderate risk of some excessive heat, again, in response to obviously the time of year where we max out our temperatures here in July, but also that drier soil surface that's going to lead to the potential for warmer daytime highs as well. All right. So to kind of conclude in the last couple minutes here, we go to the next slide. I kind of want to, expand the view a little bit. What are some of the signals that we're looking for? For those that are familiar or not familiar with El Nino, essentially we're looking at the tropical Pacific sea surface temperatures. If they're warmer than average or cooler than average, that can give us clues about our long-term weather conditions. And right now we're in INSO neutral conditions, and that's likely to remain through the Northern Hemisphere summer. So that's why I think the soil conditions are very important as we head through this summer, because we don't see any large scale climate forcing. Not to mention El Nino is really a bigger player, especially here in the Ohio Valley, once we get into our winter time. So we are trending or thinking, not forecasting, but there are signs that we get into a La Nina for this upcoming cold season, which could mean wetter than average conditions returning to the Ohio Valley, but that's a little ways off. So if we go to the next slide and we look at the July outlook, which should be updated today if it's not been already from the Climate Prediction Center. Across the entire region, confidence is pretty high in warmer than average conditions. I think this will be bumped up maybe a little bit more, considering the drier conditions that we've seen, especially in the west and the east where confidence is a little bit higher. The slightly elevated probability of wetter than average conditions across the southern tier, Missouri, Illinois, Indiana, and southern Ohio. But this isn't very high confidence levels here. So that's something that we'll keep monitoring. If we go to the next slide and look at the July through September outlook, I think we spend the rest of the summer warmer than average. I really don't see much deviation there. There are some indications of what we call equal chances in the Missouri Valley of above, below, or near normal. But essentially, we've got a slight to moderate, I think, confidence here of seeing warmer than average. And hopefully we'll get the soil moisture, the return flow from the Gulf of Mexico, and we can hopefully break the drying trends a little bit before we get too dry. But we'll have to see. The drier we get, the more likelihood that we'll continue to remain dry through our summertime, unless we get a big impulse from a tropical system or something like that can really change our surface. Now, NOAA is expecting a more active than usual hurricane season. So we'll have to watch those, obviously, as we head certainly into August and September as well. But if we go to the next slide, and I'll briefly go through the kind of this in the summary. We do expect some expansion of drought in the western states. The outlook update should be coming relatively soon. I'd be interested to see what the Climate Prediction Center has here for the eastern states that are starting to dry out a bit as well, but we'll have to see that in a moment. So if we go to the next slide. Again, I'm kind of going over my time here a bit, but just in summary, our soils are drying, stream flows are dropping. Certainly, we have some dry to drought conditions across the region, and I think we're going to remain warm throughout the growing season. So if we can get enough moisture, that could be a good thing. But if we continue to dry out, we're going to see some pressure on those crops. So we'll go to the last slide. And just for more information, there are a ton of partners throughout the region that the Slate Climate Office and I work with on a consistent basis. A similar webinar to this is provided every third Thursday of the month. You can sign up for free there. The next one is on July 16th, and the Nebraska State Climatologist will be presenting. So I'll now turn this back over to Ben, and we can start to integrate some of this as well. So thanks, Ben.
Yeah, thank you, Aaron. Much appreciated. So as always, you do an amazing job breaking down some really complex stuff for us and me too. And so I really appreciate that. I want to transition a little bit and take that to look at yields for just a second as we start looking ahead towards this new marketing year. moving away from the old crop marketing year into this new marketing year and talking about crop yield deviations. Certainly, what I'm showing here is this is just taking the average trend yield for a year and subtracting it from what we actually ended up with. So the current year value, and you can see there we had a pretty long stretch from 2013 through 2018 where we continually beat our trend yield. That's what those black bars mean, is that we came in above a trend line yield. We had better yields than what we expected. Obviously 2012 there with that 36 bushels per acre below our national trend yield. For 2019, we came in 6 bushels below the 2019 yield, or what we were expecting, which, given the challenges we had with planting and the conditions that crop went in the ground, that honestly is a kind of an amazing number for me to some extent. How late that crop got planted and the conditions it went in, to only be 6 bushels below is really an amazing feat for a lot of our genetics that we have, and farm management too, and people taking good care of their crops and working it through. When we look at the crop progress and the percent of the corn condition that's out there, and this is a graphic that the good friends at Intel FC Stone, who changed their name last week to Stone X Group. We have a branch office out of Bowling Green. They do a really good job for producers, and they were kind enough to let me use this graph. But when we look at corn condition and what that percentage is the percentage of corn per state and countrywide that's in good and excellent condition. So these are from those crop progress reports that the National Ag Statistics Service puts out, and a big shout out to Cheryl Turner and her group at NASS here in Ohio, but then across the country for helping to pull these together. Nationwide, the crop was 73% of the crop was in good to excellent condition. That was up 1% from the previous week, but you can see we're almost 17-18% above where we were a year ago, and we're above what our 5-year average would suggest for this time of the year. So we've got good crops out there. It's not and I'm technically actually in the Western Corn Belt visiting my family this week, so I'm doing this presentation from Missouri, and I drove it, and I can tell you that there's a lot of good looking crops out there. They need some rain. The soil moisture, as Aaron just talked about, is getting depleted, but you get out of Ohio and Indiana, and the corn really looks pretty decent throughout the rest of the Corn Belt. There's obviously some moisture needed in places, and Aaron talked about that dryness, but when we look at this across the country, you see that stress in the Eastern Corn Belt, Indiana, Ohio, Michigan, but Iowa, South Dakota, Minnesota, their corn is doing really well and above, significantly above where our historical pace for corn is. So we've got a good looking crop in areas where there's a lot of corn, which to some extent it doesn't bode well for us in Ohio when we're struggling a little bit. But as Aaron mentioned, there is some concern weather-wise, to be cautious, I guess, in the next month about some of these yields that we're seeing. When we look at the soybean side, kind of the same picture here. We had a long stretch of really good yields above trend after the drought year of 2012. Last year, we came in a bushel below our trend, and again, I just look at that and kind of shake my head, just kind of in amazement, given the shape that crop was put in at, and then kind of the conditions it faced at harvest even as well, but had good growing conditions while it was growing. So soybean, we've seen big jumps in trend, and that's really kind of why I show you these is we could see if you go all the way back to 2003 or 2012, we could look at 3 to 5 bushel changes in the national yield for soybeans. We've seen those in the past, but at least right now when we look at the crop, and that's what I'm going to show you here, again, same map. Now we're just looking at soybeans, and when we look at this crop across the country, we continue to see above trend or above our historical conditions at this time of the year for our crop. It looks good in places, and again, you see Ohio there at 64% good to excellent, and that's above 9% above our average, well above where we were a year ago at 28%. And so you can kind of start looking at this and knowing where the corn acreage or the soybean acreage is across the country, you can start to paint a picture of what a national yield might look like given the weather forecast Aaron just talked about. And so we'll kind of tie that all in together. But the big news today, and part of the reason why I feel like I actually have some good news to share with folks for once in a while, is on the acreage side. So we'll tie the yields into the acreage here in a second and talk about production. But when I was looking at these acreage reports, and thinking about where I was going to put acreage numbers and what I was expecting, I was way off on both corn and soybeans. I was high on corn and I was high on soybeans, and we'll talk about where those acres possibly could have gone. But part of the thing that was really kind of scratching my head is I just didn't see the switch to soybeans that I thought I was going to see. And that's kind of what I'm showing you here is when we got those March planting intentions back in March, and again, these are producer surveys that producers indicate to USDA that this is what they intend to plant. And they had signaled to USDA of 97 million acres of corn and 83.5 million acres of soybeans. Well, that was all the way back at the beginning of March, which I'm representing there in that first gray box. That's the timeline when that survey was happening. And you can see what that new crop soybean to corn ratio looked like at the time. It was close to 2.45, 2.44, which is right in the middle of, we could be indifferent based on, variable cost of putting in an acre of soybeans versus a variable acre putting in corn acres. We were right in the middle of that. So I wasn't, expecting as big of a shift as what the planting intentions in March was expecting. So I was low then. I was low in March. But then look at what happened as we kind of hit that coronavirus and we started shutting down, economies around the globe. Ethanol, became less demanded, and so therefore we had less demand for corn turned into ethanol. And we lost, a good chunk of the corn market, and it fell, 20 to, anywhere between 15 and 20%. And soybeans didn't fall as hard, and as a result, you see that relationship between new crop corn and new crop soybeans really start to favor soybeans. And by the time we got around to that beginning of May, end of April, when a lot of acres are going in the field, we were looking at a very favorable picture to soybeans. This is nationwide, by the way. This is just the futures market, and I'll show you Ohio here in just a second. But when you think about the Eastern Corn Belt and we think about our basis that we had in corn marketing in some places, that corn ethanol basis just crashed in March and April, especially here in the Eastern Corn Belt, more so in the Eastern Corn Belt than other places. And so, I'll show you Ohio here in just a second, but I was really kind of confused. And I was asking a lot of people around Ohio, are you seeing switches from corn to soybeans? And people kept saying, well, no, not really. We're not seeing big shifts. And I would ask producers and they'd say, yeah, unless we get some weather issues, we're probably not going to switch much corn to soybeans as well. And so, I was concerned that we were going to come in with a really large corn number today from the fact that I just wasn't seeing that shift to soybeans. And I'll talk about what actually happened. But, I think outside of North Dakota right now, I'm not expecting a lot of prevent plant. I just don't see it in places around the country. We have a little bit in Ohio, but I think North Dakota is pretty much going to be our area of prevent plant. And so the question became, would producers change what they, would they plant and change their planting from their March planting intentions based on this? And, we look at, our principal crop acres here, and this is where now I'm starting to understand why I wasn't hearing why people were switching from corn to soybeans, is we basically just reduced total corn and soybean acres together. So total planted acres of all principal crops nationwide came in almost 312 million acres of principal crops. That's a lot of acres, certainly no doubt about it, but that's down 2.3% from what the planting intentions report in March would suggest. So we reduced total acres from March. However, due to the prevent plant that we experienced in 2019, we're up 3.1% from 2019. And again, that was that record amount of prevent plant that we see. And you see, the prevent plant states that we talked about a year ago, Michigan, Ohio, Indiana, South Dakota, come back into the picture and represented those blue shaded states there for bringing that acreage back into production this year. However, the big question I have, and back to my story about why didn't we see corn acres switch to soybeans, is, look at our total acreage of principal crops there from 2016 to 2020. And you can see from 2016 to 2018, we were dealing with about 319 million acres of corn and soy, all principal crops, not just corn and soybeans, but all principal crops. Last year, we took about 19 million acres of that out and put it in prevent plant. So that kind of makes sense to me to look at 2019 comparable to 2018. But the thing that, is a ponder to me, and something that, I sit here and I think about, you look at 2020 compared to 2018, and we're missing about 7.4 million acres of principal crops nationwide. I don't think all of those are getting turned into solar panels, I guess is where I'm going with this. But as far as where did they go, because hay is a principal crop, we capture hay in that principal crop number there. So where have they gone? And that's something that, I assume what's happened is I think CRP's probably picked up just a little bit, but I think probably what more is happening is you're seeing some of these outer states like Texas, New Mexico, Nevada. There's not big shifts in those states, but you start adding all those up along with some shifts in Kansas, Missouri, Oklahoma, of land that's, just sitting out that's maybe like 10 acres that people are like, I don't want to plant that this year. I'm going to, just going to leave it be or turn it into woodland or make some type of habitat with it, right? I think some of that's all coming in this picture as well. But, when I go back to, the reason I wasn't hearing people switch from corn to soybeans as much as I thought is because we reduced the whole pie. We shrunk from 319 million acres all the way down to almost 312 million acres. And so that's part of that story here. When we look at the crops, and again, all I'm showing you here is the change in crops in 2020 from 2019 per crop. So we gained 7.7 million acres of soybeans this year compared to last year. Not surprising on that soybean column because last year we took a lot of soybean acres and turned them into corn prevent plant. So we picked up another 7.7 million acres of soybeans this year. You look at corn, another 2.3 million acres of corn above what we did last year. Wheat maybe is the surprising one to me a little bit, given that we saw some delayed harvest and planting in the upper plains, which kind of indicates that they were having a hard time getting last year's crop out and getting this year's wheat crop in. But you look at the wheat profitability ratio to corn, in some cases even followed up with a double crop soybean. And wheat was really competitive to corn, and so it was maybe a little bit of a surprise to me. In fact, it was a surprise, not just even a little bit. It was a surprise to me to see wheat down, almost a million acres nationwide when I thought we could be level to maybe even just a little bit above where we were a year ago on wheat. So here's the corn planted acres. Total corn acres planted for all purposes came in at 92 million acres. A complete shock, to be truthful. I don't think anybody expected corn acreage to come in down close to 92 million acres. The trade, and I'll show you that here in a second, was expecting something up around 95 million acres. And then of course that the March intentions report had almost 97 million acres of corn planted across the country. So we're down 5% from that March planting intentions report. We're up 2.6% from last year. And as I look around the country, and again, the colors in this graph, the red means a decline from the previous year. The blue means an increase from last year. But if I sit there and look, it's not surprising to see South Dakota, Michigan, and Ohio come back into the picture with corn acres. Not surprised there given the amount of prevent plant we had. But I think I'm maybe a little bit more surprised with some of the shifts we've seen from the March prospective plantings report that we saw earlier. And when I look at some of these states, North Dakota is down 800,000 acres in this report compared to what they said they were going to plant back in March. Not surprising to be on North Dakota, given the fact of all their challenges of planting and getting in late. But then you start looking at Nebraska. Nebraska is 700,000 acres down from their planting intentions report earlier in the year. Louisiana down 100,000, Kansas down 200,000, and then Indiana and Illinois both down 400,000 from their planting intentions report that we talked about in March. So again, big shocker there in corn, and I just want to show you how big of a shocker we're looking at here on the acreage side. Basically, these blue dots here represent industry guesses or people that submit estimates in terms of what the corn acreage is going to be across the country, and those are represented in the blue. The March planting report, or the prospective plantings report here in the first column, the June report that we got today at noon here in the second column. USDA's estimate is the red square. So USDA was higher than everybody in March, and they came in lower than everybody here in June. And as a result, I just took a screenshot of my DTN Profit X platform that I monitor for corn prices. In corn, the nearby futures contract up 13 cents and the deferred December contract up 16 cents. And it's holding pretty steady at there. It's come down just a penny, but from these levels. But again, a big shocker here that's really helped the whole grain complex, given the fact that we don't have as much corn coming up as what we thought we did. It becomes even more important if we start to have weather problems like what Aaron talks about, and we start seeing a short crop. That crop becomes a lot tighter. and we start moving into a better scenario and better situation. On the soybean side, just about everybody across the country, or at least everybody in the Midwest, was up on soybean acres. Again, I go back to that profitability ratio between soybeans and corn, and I'll show you that in another couple of slides here. But again, you look at the Midwest, Ohio, Michigan, South Dakota, all up big in corn acres, 11% up here in Ohio, 30% up in Michigan. And when I start looking at the change from the prospective plantings report in March, and I see Kansas up 300 acres, I see Indiana up 300,000 acres, Kansas up 300,000 acres, Indiana up 300,000 acres, North Dakota down 600,000 acres again, that's just related to their hard planting season that they've had so far this year and the amount of prevent plant that I expect up there. But you look at this and it's not hard to see a picture of why we came even, a 0.5% above the March planting intentions report, and we're 10% above where we were a year ago. And again, just much better planting conditions for soybeans. Now we just need some moisture to develop that crop this summer and help it out. So when I look at this, and this is the chart that I really like, what I'm showing you here is the contribution margins between corn and soybeans for the Eastern Corn Belt. And again, this is taking into account cost structure here. It's taking into account basis. So earlier when we just looked at the futures price, now we're looking at basis as well. And really since 2014, there has been an incentive in the Eastern Corn Belt, especially Ohio, to plant soybeans. And that even became bigger and greater this year in 2020, where we were looking at $100 better profit for a soybean acre versus a corn acre. Again, this was back the third week of April when we were planting, right? So this has changed since then. I could do this again for June and we could look at it, but back when we were making a lot of these planting decisions and going to the field to plant corn, this was our picture we were looking at. It was about $100 per acre better on soybeans than corn. Now I realize that you've got some continuous soybeans concerns in there in terms of planting soybeans year after year. You want to break that up. We didn't get to plant corn last year in a lot of cases, and so there was people like to plant corn, but again, I was shocked to hear based on this graph that we were not switching as many corn acres to soybeans as we could. And when I wasn't hearing that, I got concerned that we were going to have a big corn acreage number today. What ended up helping us out, and what was the big surprise today, is we went from 319 million acres of total principal crops all the way down to 312. And I think that's the big story. And depending on where those acres go is going to be really important when we look out, 3 to 5 years from now, in terms of, do those acres coming back into production or do they stay out of production? Do we see more move out of production as well? So again, looking here now at corn acres, this is trying to get a handle on, can we see changes in acreage from here to the end of the year? And history would tell us that we do, that this is the final. So what I'm doing is I'm subtracting the June acreage report from the final planting number. And the red bars there mean that we tend to lose a little bit more acres by the time we get to the final report that comes out in January, meaning that, we could still lose, anywhere between, 300,000 acres between now and the end of the year. That's kind of common, and you can see, the most we lost was back in 2013 when we dropped out 2 million acres of corn by the time we got to January. When we look at this planted versus harvested corn acres, again, what I'm showing you here, the red line is planted corn acres, the black line is harvested corn acres, and then the gray bars represent the difference between the two. For corn, this is mostly made up with silage, and we see that difference because we're taking 7, 8 million acres out of grain production and putting that to silage production. And so you see that represented here, and we see that wedge based on what USDA is projecting. And when we take that times the yields that I've taken those crop conditions for every state and ran them through like an individual state forecast, yield forecast model. When I do that, what I end up with is somewhere close to 16 billion bushels of production for the United States. So, a really, really high production number for the United States, 16 billion bushels, well above where we were a year ago at 13.6 billion bushels. So long story on corn is, today was a very positive thing, but we're not out of the woods yet. We still got to build demand for corn and continue to find new uses for corn to use some of that production. On the soybean side here, same thing. I'm just using an individual state crop conditions model to basically back out a state yield and then applying that by the amount of soybeans per acre in that state. And for soybean production nationwide, I get 4.125 billion bushels of soybeans produced nationwide. Again, well above where we were last year, kind of holding a little bit from our 2015 and 14 levels, kind of leveling out a little bit after we grew in 13, 14. So again, same story on soybeans, continuing to find uses. Today's report was supportive of soybeans and soybean price, but we need to continue to find uses. So let's pull all this together, and these are my last two slides. So if you've got questions in your, in your mind that we've, brought forth or provoked, please put those in the chat box, and Aaron and I will get to them here in a second. So again, here's the balance sheets for old crop corn. We went through these earlier. So now I want to talk about these new crop estimates. So that first column there, that USDA June, that's what USDA put in their June WASDE report that came out earlier this month. And you can see, I'm there at that time they were still using the 97 million acres of planted corn. They were still using a trend line yield, and you can see the demand shocks down the equation. The second column there that just says 2020, 2021 at the top, these are my estimates as of today, based on what we saw come out in the reports. These are where I think things will shake out for the year. Again, I'm trying to estimate USDA's final number, not where I think their July WASDE is going to be. So, I mean, these might be a little bit different in the July WASDE because I'm trying to estimate the final number. But again, I throw that 92 million acres in there. They're harvested acres, subtracting out some silage acres. I've got an above trend yield at 179.5. I think that's really realistic. Aaron and I can talk about this in terms of, it's dependent on those rainfalls in July as well. And looking, a couple weeks out when we hit, start really hitting pollination across the Corn Belt, which we are here, and we're hitting pollination here in the Western Corn Belt. And so we're going to need some moisture, especially given that our soil profile our moisture profile is a little bit lower than where it has been. When I look at the demand column for new crop, probably the biggest difference between me and where USDA is at is in what they're doing with feed and residual use and ending stocks. Feed and residual use is an interesting category. It's basically the catch-all from everything that gets used, and we just don't have record for it. We subtract that all out from ending, the stocks reports. But it's a category that we don't really know what's in there, but we assume it's mostly feed. We think it's mostly feed. And I look at USDA's 6 billion plus feed and residual use number for next year. And that seems really high to me, given that, this year we used 5.7. And I think we could come down just a little bit from that. So I think that's really high. So I'm taking, 300 million bushels of corn out of that feed and residual use category and putting that in my ending stocks category. And that basically makes up that difference. That's where, the ending stocks category. And that's basically kind of where we see that difference. But my corn price isn't really that much different than what USDA is expecting. Again, prior to this, I thought we'd be much lower than that 320. And I think we're probably catching that 320 somewhere about right now. However, I've got both a bearish and bullish scenario listed there in the last two columns. My bearish scenario is really, a higher than expected yield. We get rainfall here in July and we come in above 180 bushels per acre for a national average. We do not use as much feed. Our livestock sector continues to, let's assume our livestock continues to contract, even though that pork report last week shows a lot of hogs out there and a lot of breeding stock, and we're gonna have a big pig crop. Ethanol doesn't really recover to its full capacity. We stay just above 5 billion bushels of ethanol. And then exports, are kind of marginal to kind of at 2 billion bushels there on exports. And that gets us to, a 285, I think that's supposed to be, 285 corn price in the bearish scenario. And again, that's based on those assumptions. My bullish scenario is we suffer and we suck some yield out of this crop by not getting some timely rains. Ethanol, comes back, we full blown and we even expand ethanol, crush a little bit. And then we have strong exports to China, which I think is possible. They've been releasing corn out of their reserves, their strategic government reserves. And we've seen them release that. Now, I don't think they're going to flood their market with cheap U.S. corn, but I do think they will buy more corn from the world. And I see the U.S. as being a nice supplier if that relationship between the United States and China holds up. So again, both a bearish and bullish scenario there. When I look at soybeans, same picture here on soybeans. This is the old crop that we talked about earlier. Now let's look at the new crop. That middle column right there, that's USDA. And I'm sorry, that should say June. USDA June, not May. They're in the middle column. Again, they increased their crushing value 15 million bushels in their June WASDE. You can see where I'm at in that third, that 2020, 2021 column, I think it's very realistic to see, a 50 bushel per acre yield, given the conditions that we see and the stage of the crop. When you look down the list and you start looking at the demand side, I'm very supportive of soybean crush. I think that's a very realistic soybean crush, or even what USDA's got at 2.145 billion bushels. Where the big, the question mark continues to rely is, will China come in and buy significant amounts of U.S. soybeans? And right now I'm putting in that 1.95 or almost 2 billion bushels of soybeans, with the assumption that we kind of just stay in this trading environment that we're in right now, where they're buying soybeans, but they're not buying enough to meet their trade commitments, and they're not buying as many as what they did prior to 2018. So we're just kind of staying in this environment. Because Brazil continues to expand production. Their yield down there is positive, and they've seen growth in their yield and production. And so they continue to be a supplier to the world market, and we continue to see record amount of shipments out of Brazil to places around the globe, especially China. So ending stocks there at 600 million bushels. That gets us to an 855 season average price. Again, that's above that 840 PLC reference price for soybeans. And then you can see my bearish and bullish scenarios over there. And again, really what this comes down to in the bearish and bullish categories is a change in yield, either above yield or a below yield. And then what China does, if China's in the market or out of the market on soybean exports. I don't think we'll see that 1.8 billion bushel, I don't think it's unrealistic for either of those export numbers, given that we're at 6.5 billion bushels this year. 150 million more bushels next year would kind of make up some of that residual that we lost at the beginning of the year. But I don't think it's unrealistic to see 2.1 or 2.2 billion bushels of soybeans exported from the United States either. So there's kind of a big range there on the export column for new crop. Nonetheless, you look there and you can see, what those would signal to price, season average prices nationwide for soybeans. So with that, I think we do have a couple of questions coming in, but Aaron and I want to thank you for attending today and appreciate you being with us. As always, we look forward to doing these things and traveling around the state of Ohio. Here's our contact information if you ever want to get a hold of us and ask questions. But with that, Aaron, I think we've got a couple of questions, or at least one or two coming in. So Mike asked, where did nearly 6 million acres go? Idle? So Mike, that's a great question. I'm not really 100% sure where we saw that, the 7.4 is how the math works out on the acres. I do think, there's some of that possibly went into CRP, and I think some of that marginal ground, probably adds up to that million, but I'm kind of with you. I think there's about 6.5 million acres left unaccounted for that I'm not really sure where they went. If you look at all the principal crop acres, certainly we haven't done that much development. I don't think they're all under solar panels. So, I kind of look at that and scratch my head too a little bit in terms of where do I think those acres went. And if anybody has any good, assumptions or thought on that, feel free to put it in the chat box. We'd love to hear those responses as well, just because, I'm not really sure what the answer to that is. And hopefully we can find some of that out in the near future. Are there any other questions? By all means.
And there was a question from Bruce that I was going to go ahead and answer live.
Oh, absolutely. Sorry, I didn't see it.
Yeah, that's okay. So Bruce had asked about the Saharan dust, and obviously that was an issue that we talked about a little bit last week and experienced across the eastern portion of the country. It is true that the Saharan dust can have an impact on our weather a couple different ways. One, it basically obscures the sun. So those that were south of us, certainly along the Gulf Coast, had a lot more of the hazy sunshine. Not a lot of it last week made it up into Ohio, but I know I saw some photos out of Maria Stein that were pretty stunning. Purple orange sunsets, it really kind of bends the light in a different fashion and creates those sunsets. It can have a negative impact on air quality, but to also, to follow up in terms of it can have a short-term impact on tropical activity. The Saharan dust layer tends to be very dry, so hurricanes and tropical systems obviously need moist air to survive, and so it will limit that as well. Miami actually just recorded, I think it was their warmest weekend, warmest stretch of days, largely because it was dry air instead of that moist air, which kind of caps those daytime highs a little bit. So believe it or not, the drier air led to actually higher extreme temperatures there across southern Florida as well. So these features are short term, they're not long term. The dust just doesn't sit there. As a matter of fact, that first gorilla dust cloud that we were calling it last week has already moved back off the East Coast. There's another batch coming through the Caribbean now, but these aren't all long-term features and really shouldn't impact Ohio. Although I will say, you know, combined with the weather system, we certainly are looking at a drier week ahead. So hopefully that answered that, Bruce.
Thanks, Aaron.
Yep.
Is there any other questions from any participants for either Aaron or I? We'd be happy to answer them. We had scheduled this to 3:30, so we got a little bit more time. But by all means, if you need to run, feel free to do that as well. Aaron and I, like I said, have our contact information up there, and we're always happy to. Aaron's much more responsive to email and phone than I am. I tend to get sucked into something and forget to look every once in a while. But all right, well, if there's no other questions, we want to thank everybody for watching today. Oh, here we go. Mike did send in a question. So Mike's question is, he really worries about demand issues, too many ethanol plants still idle, and China a wild card. So Mike, my comments, I think, related to, let me start with ethanol first. Let me just start with that one and answer that one. We had a lot of excess capacity in the ethanol market to begin with. When you look at a lot of these plants across the country, and will they ever come back? Probably not. But will that production come back? There's a possibility that it's going to show up in some of these other facilities across the country, some more modern, larger facilities that have the ability to expand production some. And so that's where I expect some of this ethanol consumption to actually pick back up, is in a lot of those plants, even though we might not see some of these other ethanol plants ever come back online. You know, and Ohio is certainly, you know, we've got a couple of those that I do worry about, you know, whether they can stay in operation, or even, you know, we got one that, you know, I don't expect to come back up online, but that production could show up somewhere else. And so that's something to keep in mind. As far as China, absolutely. I think China is an absolute wild card in this whole thing. They have been for the last 7 years, 8 years. And that has become more uncertain in the last 2 to 3 years as we look at, you know, the U.S.-Chinese trading relationship. You know, they need soybeans, they need corn. They've certainly bought a lot of soybeans out of Brazil, and I expect them to buy soybeans, you know, in the new crop, continuing to buy U.S. soybean crops in the new crop for our soybeans. On the corn side, you know, I could see them buying corn, and it fits into their picture. I think you could see them buying U.S. corn and mixing it with their strategic reserves to kind of get a better blending corn up there, right? Because we don't know what the quality of that corn is in their strategic reserves. You know, they've been selling it out, signaling that they are, you know, tightening that market. But again, I go back to the Chinese are not going to flood the Chinese farming community with cheap U.S. corn. And so I think that's a restriction. You know, I think a lot of people had hoped that China would buy a lot of ethanol, or they would buy corn to produce ethanol with that phase 1 trade agreement. And it just never made sense to me in terms of, yes, it mathematically worked out, but there just wasn't the drive by the Chinese to do that. And as a result, we just haven't seen them buy U.S. ethanol or corn for ethanol production either. So I think China is a wild card on both corn and soybeans, but corn's maybe more realistic, or probably corn's probably the bigger wild card in my mind, because I do think they're going to buy U.S. soybeans later this year. Because you know, Brazil is certainly sending a lot of soybeans, and their market's becoming tight. We see that in their local soybean price. But I think corn could be the surprise. I think we could see them buying quite a bit of corn heading into the Chinese market as well. So another question, isn't soy crush a direct result of lack of dried distillers grains? Yes, and that was that's part of what I was capturing in the soybean crush value, that index in terms of bushels. Basically what we saw is DDGs became less available. We saw a run up in demand for soybean meal, which then increased the soybean meal price. That was coupled with some logistics issues in Argentina, where buyers of soybean meal weren't able to get that soybean meal product out of Argentina. So they were looking at the US, and that was adding more demand for our soybean meal. here. And so that was helping with the price as well, coupled with kind of declining soybean price, or stagnant soybean price, led to that profitability that I talked about, that incentive for soybean crush facilities to increase production of soybean meal. And we saw a larger crush values than what we probably would have without it. And so, yes, that is certainly part of the picture there, Mike, in terms of, yes, there was more demand for soybean meal as a result of DDGs, but I like the prospects of soybean crush continuing to expand, just maybe not at the rate it has so far this year. I think we will slow down just a little bit from that, but overall soybean meal is still in demand given the record amount of hogs that we have across the country. So good questions. Anybody else got questions? All right, I don't see any further questions. Aaron, I want to thank you for being a part of this today. As always, for everybody, if you would like to access the slides or watch the recording of this, it'll be available at the farm office at osu.edu. And we look forward to seeing you around the state of Ohio soon. And with that, we wish everybody a good day, and we hope the rains continue to fall for a while to get some moisture for our crop. And so thank you and have a great day. Bye.
Thanks.